Hello guys, welcome to i-tutor Academy. In today's session, we will start with the cost sheet, that is Unit 6, MMBC 004, subsection 6. The element or components of the total cost can be presented in the form of a statement, popularly known as the cost sheet. The cost sheet may be prepared separately for each cost center. It may have columns to show the total cost per unit, together with the relevant figure of the previous period. The technique of preparing a cost sheet can be understood with the help of illustration. So here is the illustration of cost sheet. So illustration 1 is here. You just go through your Ignou material for this because it can't explain, only through practice you can know the this section. Okay, and total cost of production is there and the activity is there accordingly. So you just try to do that activity also, so it will be more easy for you. And next one is classification of cost. Cost can be classified into different categories depending upon the purpose for which information is required. The cost can broadly be classified into fixed, variable, semi-variable and step cost. Fixed cost. These are the costs that remain constant irrespective of the quantum of output within and up to the capacity that has been built up. Example of such costs are rent, insurance, charges, management salary, etc. And fixed costs remain constant per unit of time. As a result, they decrease per unit with every increase in output and vice versa. So example also here. Committed fixed cost consistently primarily of those fixed costs that arise from the possession of the plant, equipment and a basic organization structure. For example, once a building is constructed and a plant is installed, nothing much can be done to reduce the costs such as depreciation, property taxes, insurance and salaries of the key personnel, etc., without impairing the organization competence to meet the long-term goals. Discretionary fixed costs are those which are set at a fixed amount for specific time period by the management in the budgeting process. These costs directly reflect top management policies and have no particular relationship with the volume of output. These costs can therefore be reduced or eliminated if the circumstances so required. So example is here, fixed cost behavior, and this is a chart based show the behavior of fixed cost geographically. Okay, and variable cost, these are the costs that vary in direct proportion to output. They increase or decrease in the same proportion in which the output increases or decreases. So example of such a cost are direct material, direct labor, power, etc. And here is also one table, variable cost behavior. You just go through it. And semi-variable cost, these are the costs that do vary but not in direct proportion to output. They are made up of both fixed and variable cost elements such as description, repairs, light, heat, telephone, etc. And semi-variable cost behavior is here. And identification of fixed and variable element of semi-variable cost is essential for the management for planning their business activities. Different methods are available for this purpose, which will be discussed in the next unit. Step cost. Fixed cost in general remain fixed over a range of production activity and then jump to a new level as activity change. For example, a foreman can supervise a given number of workers. Beyond this number, it is necessary to hire a second foreman, then the third, and so on. Similarly, the rental cost of delivery vehicle also follows the same pattern. The general characteristics of fixed cost rising in steps depicted in figure is here, and illustration also based on the topic. You just go through it. In case any doubt, you can contact us. And direct and indirect cost. Direct cost is this cost that can be directly or conveniently and only traced to a product, service or job. Example of such a cost are direct material, direct labor and direct expenses. Indirect costs, these are costs that cannot be directly or conveniently and wholly identified with a specific product, service or job. They include all overhead costs such as salaries of timekeepers, storekeepers, foremen, printing and stationery costs, etc. Indirect or overhead costs are apportioned to different jobs, products or service on a reasonable basis. For example, the indirect factory labor cost may be apportioned over different jobs according to their direct labor cost. Similarly, the selling overheads can be charged to different products according to their sales value, and based on the activity also here. And next portion is some other concept of cost: shutdown and sunk cost. Shutdown cost, these represent the fixed costs that have to be incurred even when a factory is shut down on account of some temporary difficulties, vice versa, and shortage of raw material, non-availability of requisite labor force, etc. During this period, though no work is done, the fixed costs such as rent, insurance, depreciation, maintenance, etc. for the entire plant are still to be incurred. Such costs of the ideal plant are known as the shutdown cost. Sunk cost, these are historical or past cost, or the cost incurred as a result of a decision made in the past. Such a cost cannot be reversed or revised by subsequent decision. Investment in plant and machinery, building, etc. are some prominent example of such cost. Sunk costs are considered not relevant for decision concerning the increase in the present profit level. Let us consider an example. You just go through your material. So through example, it will be more clear for you. And controllable and uncontrollable cost. Controllable cost, these are costs that can be influenced by the action of a specified member of an organization. For example, the foreman of a production department can control the utilization of power or raw material in his department. These are therefore controllable costs as far as he is concerned. And uncontrollable costs, these are costs that cannot be influenced by the action of a specified member of an undertaking. For example, the foreman of a production department can control the wastage of power in his department, but he cannot control the power being wasted in the powerhouse itself, resulting in a higher cost per unit of power to him. And imputed or hypothetical cost, these are costs that do not involve cash outlay. They are not included in cost accounts but are important for making management decision. Example also there. And differential, incremental or decremental cost, the difference in total cost between two alternatives is termed as differential cost. In case the choice of alternative result in an increase in total cost, such increased cost are known as incremental cost. If the choice decreases total cost, the resulting decrease is known as decremental cost. Based on the illustration also here in your material, you just go through it. And out of pocket cost, out of pocket cost means the present or future cash expenditure regarding a certain decision, which may vary depending upon the nature of the decision made. For example, a company has its own truck for transporting raw material and finished products from one place to another. You just go through it, it will more clear for you the concept. And opportunity cost, opportunity cost refers to the advantage in measurable terms which has been foregone on account of not using the facilities in the manner originally planned. Example also here. And the traceable, untraceable and joint cost. Traceable costs are that can be easily identified or traced to specific product, services or unit of the company, such as raw material and labor. Untraceable cost, these are costs that cannot be identified with a departmental process or product. Such a costs are also termed as common cost. And joint cost, whenever two or more products are produced out of the same raw material or process, the cost of material purchased and the processing cost are called joint cost. And conversion cost, the cost of transforming direct material into finished product exclusive of direct material cost is known as the conversion cost. And summary of this unit is here. In order to maximize the firm's wealth, ascertain and controlling cost is necessary. Cost control involves controlling different elements of cost: material, labor and expenses. Each of these elements of cost can further be classified into direct and indirect. The term overhead is used for all indirect cost. Cost can be classified into different categories: direct and indirect cost, fixed, variable and semi-variable cost, controllable and uncontrollable cost. All these we discussed already in this chapter. And keywords are there. If you feel any keywords are difficult, you just refer this section. and self-assessment questions also here. What do you understand by cost accounting? State its objective. We already discussed. What do you understand by cost? Explain its different element. And all controllable costs are direct cost. Not all direct costs are uncontrollable. Explain with the help of suitable example. Fixed costs are variable per unit, while variable costs are fixed per unit. And fourth question, and how would you differentiate between direct cost and variable cost? Give suitable example. And here is also true and false based questions, and select the most appropriate answer for each of the following case. Okay, you just go through this and try to answer and prepare a cost sheet also. We already discussed about cost sheet, and illustration section also we discussed, and calculate value of raw material, total cost of production, etc. Right, these are the question based from this unit. You just try to answer this. It will more helpful for your final term and examination. In case any doubt in between, you can contact us through our phone number, or you can comment it on our comment box also. Thank you so much.
i-tutor ES presents Ignou MBA, complete syllabus coverage classes and individual semester base, subject coverage program for MBA students online and flexible sessions. For more details, contact 62382 1788.